All right, welcome back to this morning's Bull Run. And joining us to go over today's top news of the day, we have one of my favorite friends of the program. We got Anton from Xapo Bank. Anton, happy Tuesday. Holler if you hear me, my friend. How are you? Great to have you back on the show.
Hey Hank, I'm excited to be back, and I like your new screen. You're elevating the experience. Really, really nice.
Oh, yeah, the team is really working on the computers and everything and telling me where to point. I feel like Vanna White out here. It's great. So, Anton, always a pleasure to have you back on the show as the father of the world's youngest Bitcoiner. How are they doing? Everything well in your world?
Yeah, Hank, what I'm seeing is that my son is now the youngest Bitcoiner, and he's accumulating and stacking Bitcoins. I'm like even recording a video to him, like explaining, see, I'm thinking about your future. You're going to be good because I'm thinking for you, thanks to Satoshi. We're going to be all good. But yeah, I mean, my son is great. It's a really nice experience to stack Bitcoin and be with him.
Love it. DCAing, never a bad time to start, especially when they're young. All right, Anton, we got a lot of news to go over today, so hang tight. We'll be back at the end of a second. I'm going to read this story and we'll jam about it. Sound good?
Yes.
All right, so first up, it appears that, well, businesses aren't just testing the waters with Bitcoin anymore. They're cannonballing on in. As Rivers Research latest report shows, companies across industries have been purchasing over 1,700 Bitcoin per day. That's worth about $195 million daily. Over the last 20 months, that flow has contributed more than $1.3 trillion to Bitcoin's market cap. Now, corporate reserves ballooned from 510,000 BTC to 1.3 million between January of last year and August of this year. The number of publicly traded companies with Bitcoin went from 39 to 158 during that same period. Or in other words, adoption didn't grow, it pretty much exploded. Businesses now control over 6% of Bitcoin's circulating supply. That's a 21-fold increase since January of 2020. And the biggest driver has been the Bitcoin treasury companies, of course. They account for 76% of all business purchases since January of last year and 60% of publicly reported holdings. These are the companies built specifically to amass massive Bitcoin reserves and give shareholders indirect exposure to Bitcoin's price without them ever needing to touch a cold wallet. Now, the whole model was pioneered, of course, by Michael Saylor back in August of 2020. Hey, buddy. When then MicroStrategy, now rebranded, of course, as Strategy, bought $250 million worth of Bitcoin. That stash now sits at over $70 billion. And Saylor's playbook inspired over 50 copycat treasury firms. Now, before 2024, Bitcoin adoption by corporations was limited to niches like mining companies, crypto startups, and the occasional Tesla headline. Now, that all changed dramatically in 2024. River reports that Bitcoin is now showing up across industries. We're talking real estate, software development, consulting, healthcare, logistics, consumer goods, media, automotive. The list keeps going. Now, allocations aren't exactly symbolic either. The average corporate allocation in July of this year was 22% of net income, with the median at 10%. And 63.6% of these companies treat Bitcoin as a permanent investment vehicle. They're continuously accumulating and have no intention of selling or rebalancing. Now, this level of institutional commitment is why analysts are looking at 125K as the next realistic price target. Now, the barriers that used to spook companies, fears of government bans, restrictions on ownership, and liquidity concerns have mostly disappeared. Multiple sovereign nations now hold Bitcoin. The United States launched its strategic Bitcoin reserve program back in March of this year. And prominent figures like Jerome Powell, Larry Fink, and of course Donald Trump have completely flipped their public stances on Bitcoin in recent years. Bitcoin's liquidity has also matured. It now trades as one of the most liquid assets globally, 24/7, in sharp contrast to traditional treasury instruments. Now, on the technical side, analyst ZinWeb3 points out that Bitcoin often bottoms at the 0.382 Fibonacci retracement level. That pattern played out in Q3 of 2024 and again in Q2 of this year. The level now sits around 100K, suggesting the worst case scenario is a 10% drop before a 50% rally to that 150K mark. Currently, Bitcoin has been stuck between 107 and 113,000. Breaking above 114 would be the first test of bullish strength, with 120K as the next key resistance level. Clear those levels, and 125K is very much in range, but you fail to break those levels and we could retest 108K before the next big move up. But the underlying story here remains unchanged. When businesses are vacuuming up over 1,700 Bitcoin every single day, and most of them refuse to sell, it's only a matter of time before the supply squeeze pushes prices even higher. All right, we're bringing Anton back. Anton, River reports that businesses are now buying over 1,700 Bitcoin a day. That's about 195 million bucks daily, adding 1.3 trillion to the overall market cap in the last 20 months. At this pace, are companies basically becoming the new miners, the real supply engines of Bitcoin? What do you think?
Hank, I think you just did the longest quantitative overview since RoxomTV started, and I watch all of the shows. That's great. So there is a ton of information to discuss here. I would like to point one of the. I want to point of what you just mentioned about the institutions buying Bitcoin. Assuming the data from the report is correct, this means that 15% of the Bitcoin was acquired from institutions approximately for the past year and a half, 2 years. And now this can be analyzed from different perspectives, but overall, like 15% of the Bitcoin which is available being acquired from institutions for a period of 2 years, it's crazy. It's actually amazing. Maybe now the people watching this show are thinking, wait, like if you're saying that the amount of Bitcoin being acquired, it's very high number. Why the Bitcoin price is not at 150, 201 million right now? Well, Hank, I don't know if you know, but yesterday I cheated on you. I was on RoxomTV UK. Yes, please forgive me. Please forgive me. But yesterday, actually, I mentioned that there is approximately 300,000 Bitcoins that have been sold from long-term holders. Those are like Bitcoin OGs, people that purchase Bitcoin at 100, less than $100. And now they are selling. And this is a pattern which we cannot underestimate. And the fact that those OGs are selling, it's pushing the price down. And then on the other hand side, you have like institutions purchasing 1,700 Bitcoins per day approximately, which is insane. It's like 200 million of US dollars floating into the Bitcoin ecosystem. So I think what we are seeing right now, it's a redistribution of OGs selling, institutions buying, but the institutions are like those, they're going to hold the Bitcoin they're here for the long game. They're going to hold it. And people are not realizing today how much those institutions are willing to hold Bitcoin. And what we are seeing right now, I think it's creating the perfect base for the price to skyrocket from here, because those OGs are not going to keep selling for so long. Even though we have the pattern, what I'm seeing right now is that institutions will keep buying while the OGs at some point will stop selling, which is quite exciting, I would say, for everyone. Like what's happening right now should not be underestimated.
Yeah, no, absolutely. I mean, the institutional interest that we're seeing right now cannot be ignored. Corporate reserves jumped from 510,000 Bitcoin to 1.3 million in under 2 years. And the number of public companies holding Bitcoin went from 39 to 158. Which begs the question, Anton, do you think we're witnessing the permanent corporatization of Bitcoin? Or is this just another cycle trend and everybody's getting on the old Bitcoin treasury bandwagon? What do you think?
I will rely on the data we are seeing right now, and it's a fact that institutions are buying. There is institutional FOMO right now, rushing to acquire Bitcoin. It's easier than ever, considering the regulations right now that are in place in pretty much every country around the world. And those institutions, they're going to stay with the Bitcoin. Now, it's a different story if they're purchasing 1% or 10% of their holdings into Bitcoins. But even 1%, it's actually allowing them to learn how to buy and how to store their Bitcoin. And once this like established process in those companies, they're going to just accelerate the investment. They like the investment from their treasuries to be held in Bitcoin. So the percentage of Bitcoins that institutions are owning, it's only going to go up, because what's happening and this is like the normal supply and demand, when the price of the Bitcoin is high enough, OGs and some of the retails, they're going to sell because there is this Bitcoin maxi. Maxi's understanding that you should never sell your Bitcoin, but the on-chain data is actually showing the opposite. People are selling Bitcoin, probably because they purchase at $100 and they're going to sell at 1 million, but they will sell. And institutions are here to buy. Those are trends which I think are not going to hurt anyone. And at the end, it's like that's how Bitcoin is constructed. Like if you offer the right price, you can acquire it. I don't see anything concerning here.
Yeah, and the corporations aren't messing around either, as their average allocation is around 22% of net income, with the median being around 10%. And that is, in no way symbolic. That is some real conviction we're seeing on the institutional side. But do you think that this level of commitment holds through the volatility we will likely see in the future? Or will these new CFOs maybe panic the second Jerome Powell sneezes and says he's not going to cut interest rates or something? Do you think, it sounds like you think they're here to stay with the Bitcoin, huh?
I think in short term, we may see some concerns from the CFOs because they have like quite traditional approach dealing with volatility. But Hank, I think the Bitcoin volatility is going down every year since 2022. The biggest drawdown, I think it's like 15%, and like it's going down and down. The volatility is decreasing, which is going to be good for the traditional companies interested in buying Bitcoin. So for sure, like in long term, this is not going to be an issue. In short term, we may see some concerns from those corporates, but yeah, the long term game is quite clear to me. Do you know what I'm sad right now? I'm sad for those retail customers that are just selling their Bitcoin, and then they're going to rush buying at much higher price in 1-2 years, even 3 years from now. But yeah, that's at the end, that's the game. Like if you cannot hold, you regret and you buy later at the price you deserve. So you know who said this? If I say the name, it will appear. It will appear in the right corner. But yeah, that's what Michael Saylor said.
That's right, he will. That's right. I mean, he pioneered the model back in 2020. And that begs the question, right? Like, we're seeing all of these copycat Bitcoin treasury firms, which at face value seems great, right? But it makes you wonder, like, is this herd mentality sustainable? Or is there's always that risk, right, that when one of these treasury companies sees that bit of a retracement that maybe they weren't anticipating or expecting, then maybe they sell, one domino wobbles, and then the whole corporate stack starts this, to sell off themselves. Are you concerned about that all in the short term, that some of these new holders are going to have paper hands, the first sign of volatility?
Now, it really depends on what type of concern I should or we should have here. Is this going to damage the Bitcoin price in short term? Yes, probably yes. But Hank, we survived the FTX crash. We survived the situation where like over 50,000 paper Bitcoins have been just put into the system. And then if we have a treasury company which is forced to sell, I will be concerned if I'm owning their stock, because most probably the stock will crash. But if you hold Bitcoin, you're embracing the volatility. You're here presumably for the long game. We may see, most probably, we will see some treasury companies being forced to sell, because what's happening right now, someone may argue that it's not sustainable. But at the end, like as I mentioned, the Bitcoin price volatility is going lower and lower, and like in long term, I don't think this will damage the Bitcoin price at all. Maybe in short term, yes, but it also depends if you hold Bitcoin or you just hold the stock. Because right now, if you're owning strategy stock, your volatility is much higher than Bitcoin anyway. Probably your returns are also higher, but at the end, it's just your risk profile, what you want to achieve. So yeah, I mean, I'm here. I'm here since 2013. I didn't buy Bitcoin back then. I regret. So what I learned is that the Bitcoin price will survive any type of short-term volatility.
Right. And I think you just created my new shirt that I'm going to make that just says Bitcoin, embrace the volatility. And maybe we'll have Michael Saylor getting electrocuted or something. Sounds fun. On the more technical or numbers aspect of this, analysts are saying that if we break 114 and 120, then those are kind of the main technical hurdles that we're going to see before the next leg up, which would be 125, which would be new all-time highs. So with companies vacuuming up this huge amount of Bitcoin every day, over 1,700, and seemingly at this point refusing to sell it, do you think Bitcoin is setting itself up for a big supply shock come Q4, maybe something that'll melt faces and balance sheets at the same time? What are you expecting as we enter to what is usually one of the best quarters, if not the best of the year for Bitcoin? What are you expecting, Anton?
Yeah, I have to speak from my personal views. I think the Bitcoin right now is in a very strong bull market. I understand that some people will say that we used to have much ridiculously crazy bull markets in the past, but that's the normal evolution of 2 trillion asset. Like it's normal to not have 100% overnight returns. Right now, considering the strong institutional demand and not so strong patterns of OG sellings, I think the Bitcoin price will keep appreciating. Are we going to see 145 or 150 in Q4? It's very likely to happen. But I would definitely not be disappointed if the Bitcoin price finished the year at 100,000 because Hank, 3 years ago the price was 20,000. So like we should be fine. We should be fine because also Bitcoin never been in a stronger position, having the US government supporting so strongly the entire crypto ecosystem. Because 3 years ago we had Operation Choke Point 2.0, where the US government actually attacked the entire industry, and right now it's completely opposite. So yeah, I think buying Bitcoin, especially with the DCA strategy, is a great opportunity and a great way to accumulate more Bitcoin, which is what I am doing. So yeah, I think it's very possible to answer your question. It's very possible to see the Bitcoin reaching 145 in Q4. I personally think it will happen, but again, we should not be disappointed if the Bitcoin is at 100K.
Yeah, I mean, the setup looks pretty nice as we enter what is, again, usually a very bullish Q4, but we'll see how it plays out. But with all of this institutional money now in play that we hadn't really seen before, the setup seems to be there. And we're going to get back to you in just a second, Anton, because I want to go over this next story really quick. Because despite all this institutional money we've seen recently, research from River shows that individuals, believe it or not, still control the majority of Bitcoin, as about 66% of the circulating supply, that's roughly 13.83 million coins, belong to individual wallets. That includes both self-custody and exchange accounts tagged as personal. Now, on the institutional side, businesses hold about 6.2% of the supply, or about 1.3 million Bitcoin. ETFs and funds are larger, with about 7.8% or 1.63 million BTC under their control. Governments, based on public sovereign addresses, hold around 1.5%. And then there's the nobody's getting it back pile. Of course, we're talking about lost coins, which are estimated at 7.5% or 1.58 million Bitcoin based on old wallets that haven't moved in years. Satoshi himself, or Patoshi, depending on which research you believe, is pegged at about 4.5% of the total supply, which is just under 1 million coins. Finally, there's the miners prize pool. That's about 5.2% of supply, just over 1 million Bitcoin. Hasn't been mined yet before the 21 million hard cap. Now, River says its estimates aren't perfect. Custodians hold for multiple clients, and some wallets are misclassified, and ownership is often murky. But the conclusion here is actually quite clear. Individuals still dominate Bitcoin holdings. Institutions are catching up fast, especially with ETF growth and corporate balance sheets now stacking sats. For now, though, the Bitcoin story isn't Wall Street's, it's the plebes. And that's exactly how Satoshi would have wanted it. All right, bring it back, Anton. Anton, River's research says individuals still control about 66% of the circulating Bitcoin supply. That's like 13.8 million coins. Does that surprise you, or is this exactly why Bitcoin was designed to stay in the hands of the actual people instead of being eaten alive by Wall Street ETFs? What do you think?
I think what we're seeing is absolutely astonishing. 66% of an asset which Wall Street institutions and governments are rushing to buy is still owned by individuals. As you, Hank, said, this is exactly what Satoshi dreamed of. That's exactly why he created Bitcoin. And I'm like seeing these numbers. I'm like really thinking of myself. Bitcoin is amazing. Like that's exactly why I believe in the mission of Bitcoin. I believe that Bitcoin will actually change. It is already changing people's life. I also want to highlight that institutions like ETFs, yes, they are buying Bitcoin, but at the end, the money going from ETFs, actually, they're like for normal investors. Yes, they do not own the Bitcoin physically, but like for them, owning Bitcoin through ETFs may be just easier, probably because their broker is allowing them to buy Bitcoin through ETFs. But like the 66%, actually, I believe it's higher if we incorporate the ETFs owned by individual investors. And yes, the institutions are here, they're buying aggressively, but they're still far away from owning majority of Bitcoins. And I am not sure if this will happen because, Hank, yes, we have a sell pressure right now from OGs, but at some point this sell pressure will stop and people will realize that Bitcoin is appreciating 40% every year on average. Why should I sell
Right.
my Bitcoin to corporate to Wall Street? Like it makes zero sense because if I sell it today, tomorrow it's going to be like 40% higher or next year is going to be 40% higher. So yeah, I think this number is not going to go below 50%, and that's the beauty of Bitcoin. It's centralized, and most of the coins are owned by individuals. I think it's amazing. It's the only asset in the world which currently has this distribution.
Right. And yeah, to your point, that makes a lot of sense too. If you took, I mean, ETFs are like 7.8, almost 8% of all Bitcoin holdings right now. And yeah, a lot of those are just individuals looking to get exposure without having to deal with the pains of a cold wallet. So the individual percentage, to your point, is probably a lot higher. But, we have seen a lot of businesses and institutions come in. That's just over 6%. Governments are 1.5% right now. Long term, though, how do you see this balance shifting? Do you think that it sounds like you think individual ownership will always remain kind of the dominant percentage no matter how many sailor-sized treasury firms pop up? Or do you think with governments eventually starting to put Bitcoin on their balance sheets and with more and more treasuries companies popping up, do you think it is possible that maybe that balance gets below 50% for individual holders at some point? Or do you think they're going to be holding and hodling strong for the long term?
It's very speculative, but if I have to bet right now, I won't say that the ownership is going to go below 50%. And this simply because the people that are owning Bitcoin, majority of them are here understanding the purpose of Bitcoin. It's understanding that it's like there is a market, like there is a cap of 21 million Bitcoins. You cannot create more Bitcoins. And they know that if they sell now, at some point they have to buy at higher price. And the people that are speculating, I absolutely understand their point that they want to buy now and sell tomorrow. But usually those speculators, they're not speculating with very large amounts of Bitcoin. So I think those are like we can statistically ignore those speculators. So majority of Bitcoin holders right now, and I can confidently say this, are here because they understand Bitcoin and they understood Bitcoins years ago, and they're not going to sell their coins easily. Some of them are selling, so that's why I think the current percentage of 66 or even more will go down. Going below 50%, I don't think we are going to ever see this.
Yeah, and the story made a good point too that, they estimated that nearly 7.5% of the supply might be lost or gone forever already. Satoshi's stash sits around just under 5%, and miners have about 5% left to unearth themselves. So it begs the question, Anton, how much does that dead supply really matter to the overall market? Or is it simply a permanent liquidity crunch that we've all just kind of accepted at this point?
We have to be careful considering the like lost Bitcoin because quantum computing it's right around the corner. At some point, those coins may be stolen, and once this happens, the supply of those Bitcoins will flood the market. Right now, yes, considering where we are right now with the quantum computers, we have those Bitcoins, like approximately 15% of the overall supply is lost. But again, I'm very careful claiming that those Bitcoins will be lost forever because at some point they may not be. Yeah, that's a slightly separate topic. But right now, yes, the available demand, like the available supply of bitcoins, it's definitely not enough to cover the demand from institutions, and that's why I'm saying it's very interesting situation right now, because we have the perfect base for the Bitcoin price to skyrocket in the next few quarters. Because Hank, I really believe the 4-year cycle is broken. Like, and it got broken when the Bitcoin hit all-time high before the halving last year. And because of this, like, no one really can predict where the price is going to be based on historical patterns. But based on what I'm seeing right now on chain, it's a perfect, we have the perfect situation for the price to constantly go up for the next quarters, if not even years. And I'm telling you, no one is really prepared for what's coming.
Yeah, no, it certainly seems like it's a great setup for us to continue a slow and methodical climb up and to the right. But like you kind of mentioned, it is unpredictable because the nature of the ecosystem right now is so different than what we've experienced previously, right? All this institutional money, government regulations finally blowing in favor of Bitcoin going forward. So it's a really unique spot. The setup looks great. How high can it go? Only time will tell. But another interesting point is that, we were talking about the individuals right now seem to be in the lead or in charge when it comes to Bitcoin holdings. Nearly 2/3 of the holdings are in individual wallets. But if individuals really are the backbone of Bitcoin ownership, what do you think that means for Bitcoin's future? Is it bullish because the grassroots hold is strong on Bitcoin, or is it maybe bearish because institutions aren't in control enough to pump our bags properly moving forward? How do you think this plays out?
Hank, I think what everyone is missing right now is that institutions are buying Bitcoin, and at some point they're going to rush for owning as much as Bitcoin as possible in order to ensure like they can compete with others. Because what strategy did right now, they set a new standard for how to play this treasury game, and other institutions, they don't have a lot of a lot of options right now. So they have to either implement the Bitcoin treasury on their balance sheet, or they're going to just be ignored from the investors. And I think this will only lead to a situation to have more institutions owning more Bitcoin. Is this bad for the industry? I don't think so, because our long-term vision is that Satoshi created Bitcoin to be a P2P electronic cash system, and at some point institutions will have to do something with the Bitcoin they acquired, because right now they're acquiring, but at some point the Bitcoin, it's supposed to work for you. They can either lend it, or they can use the Bitcoin they acquired, for example, to process transactions, or to create some very innovative products that right now they don't exist, simply to make some additional gains. Because I think that's what also Michael Saylor is envisioning. Yes, he's saying right now to everyone, Bitcoin is a digital gold. Never sell your Bitcoin, or don't touch your Bitcoin. But he will not have a choice when you have let's say Google buying Bitcoin and then realizing the potential of Bitcoin to be much more than store of value. So then what Treasury is going to do? They're going to just follow Google or Amazon or any major IT firm, or that is doing something with the Bitcoin, because the investors will very easily, with a few clicks, they will move from owning strategy stock to owning the very innovative IT company with 100,000 Bitcoins that actually is not only getting advantages from the Bitcoin price appreciation, but then getting additional yield with some innovative solutions. Maybe deploy Bitcoin to earn yield by processing Lightning Network transactions, sourcing liquidity to the Lightning Network, or just use a Bitcoin to earn yield by having some very smart lending strategies. So I think that's coming. Maybe it's a little bit early, but this will come at some point. So it's good for the ecosystem. I'm definitely bullish right now on the system.
Yeah, I am too. I mean, more and more products, as we're seeing, are going to be available that utilize Bitcoin. And what are these corporations going to do? Keep holding cash like a bunch of fiat clowns? I don't think so. So, yeah, I'm on the same train as you, my friend. Now, hang tight here. We're going to hop back on with you in just a second, Anton, because I want to talk about this next story with you for sure. Because Satoshi Nakamoto, who you might know vanished in 2011 with a note saying, "I've moved on to other things." And now, 14 years later, other things has apparently meant letting the internet fight about who he is. Now, Joseph Shalom, the co-CEO of SharpLink Gaming, which also manages a $3.6 billion Ethereum treasury, well, he's got a theory. He thinks that Satoshi will come back when quantum computers threaten Bitcoin. The hero we deserve. Yes, I am talking about quantum computing, the tech boogeyman that was supposedly going to show up within the next decade and breaks all encryption like it's a wet napkin. Now, the Bitcoin community is already spitballing solutions, hard forks, new encryption, maybe even freezing Satoshi's old coins. Now, Shalom thinks that when those decisions hit, Satoshi will reappear because his stash, well, it'll be on the line. In his words, when the quantum moment arrives, somebody's going to say, "I don't want to be forked," or "fork me," which is definitely the weirdest way to talk about defending $120 billion. That's how much Satoshi's suspected wallets, the ones identified by the Patoshi pattern, are worth today. Roughly 1.096 million Bitcoin, making him the 12th richest person on Earth without ever cashing out. A 23% price jump would push that stash to $150 billion and crack the global top 10. Now, prediction markets, they don't buy it. Myriad says there's a 90% chance Satoshi won't hit that number this month, but if those wallets ever move, the market would melt down faster than a TikTok influencer during a power outage. Shalom says Satoshi could also use old email addresses or his Bitcoin Talk account to resurface, not doxing himself, just flexing the keys. Of course, Satoshi's speculation is practically a sport at this point. People have accused everyone from early Bitcoiners to Elon Musk of being Satoshi. HBO even ran a 2024 documentary trying to pin it on Peter Todd. The community, though, they dismissed it. Todd dismissed it. Pretty much the only person who hasn't denied being Satoshi is Bigfoot at this point. But Shalom's theory has one thing going for it. If quantum really does threaten Bitcoin, the only person with more at stake than Michael Saylor is the guy who invented it. Bringing Anton back. Anton, what do you make of this, man? Quantum computing, it brings Satoshi back. Is this all just internet fodder, or do you think there could be some truth to this?
You remember, Hank, last time when we talked, you showed me this website which was counting the debts of Bitcoin. I think we need the same website to count how often Satoshi is going to be revealed, or when he's expected to come back. Probably we have this every month, a few times per month. No, but this guy is running Ethereum treasury company, right? So when someone being engaged with Ethereum try to attack maybe indirectly Bitcoin, it just makes me laugh. Just makes me feel strange. I don't really buy this statement that Satoshi will come because of the quantum computing threat, because Satoshi was he had the opportunity to come back during the block size wars in 2017-18. He potentially had the opportunity to come back in 2021 when this institutional adoption started, because just maybe Satoshi is not very happy to see institutions buying Bitcoin so aggressively, and he decided to not appear. Is he going to appear now because of the quantum computers? 100% no, because this is just a normal evolution of how the technology is progressing. And I'm sure, with the very strong Bitcoin community we have right now, we're going to find the right approach to ensure that quantum computing is not going to threat the Bitcoin ecosystem. And I already see some great events that happened in the past few weeks. You probably saw the Quantum Summit from Presidio Bitcoin that happened a few weeks ago, and there are some crazy good insights what's going to happen. But Hank, if you allow me, there is one thing which I agree with this guy and his statement, and that's the philosophical and ethical consideration. What we should do with those dormant Bitcoin wallets. It's statistically proven that probably 36% right now of all available Bitcoin it's under quantum computer threat, which means those coins can be stolen, and they will be stolen. Like Satoshi's 1.1 million Bitcoins, they will be stolen at some point, like from bad actors. This will happen, and it's inevitable. And now the philosophical question is, should we do something to prevent this from happening? Because this means the Bitcoin principle of integrity is going to be like happening, actually justified. But then there is another principle which is going to be this is going to violating the principle of immutability, meaning the Bitcoin is unchangeable. Why someone will decide what to happen with the Bitcoins I own? Maybe I'm dead a long time ago, but I still have Bitcoins in my address. Why a centralized entity, or why a group of people should decide what to happen with my Bitcoin? Because Bitcoin was designed to be unchangeable. Like the design of the network should stay as it is, maybe with some small improvements, but the core design is not changed, and it's never been changed. It should never probably be changed. That's like a very philosophical, deep discussion. What should happen with those Bitcoins? Now imagine Satoshi owning like 1 million Bitcoins, which is approximately $120 billion right now. When the bad actors actually access his coins, this is going to actually bring in short term the Bitcoin price volatility significantly, because imagine having 1 million coins that are like constantly being sold, and then there is over 5 additional million Bitcoins that are going to be stolen, and at some point they will hit the market unless the community decides to do something. I don't have the answer for myself, which is the best approach here, because whatever the community decides, is going to be always people criticizing this and people supporting this. So it's one of the most important, if not the most important, challenge for the Bitcoin community, which should happen in the next 2 to 3 years, because the quantum computers are coming from 5 to 10 years from now. So we have like 36, 48 months to decide what to do. So it's one of the most interesting topics right now.
It is. It really is a very interesting philosophical quandary of sorts. And it also begs the question, let's just say someone came out and they said they were Satoshi and they were able to verify that it was Satoshi. What kind of tailspin do you think that would put the market into? Could that be bullish for Bitcoin? Because like, let's say Elon pops the mask off and he is Satoshi. Is that bullish, putting a face to that name? Or is it actually bearish because it kind of loses some of its purity, right? Because any person you put with it, whether it's Elon or Jack Dorsey or Peter Todd or someone else, then it comes all of that personal baggage and feelings are now associated with this thing because they ultimately created it. So do you think us actually finding out who Satoshi is would even be a good thing for Bitcoin?
Absolutely no, because Bitcoin got recognition from so many people so early, almost immediately after it was created, because the founder is anonymous, is decentralized, and literally there is no single person behind Bitcoin. Now, you may make a point that okay, Bitcoin is already so decentralized. There are hundreds of thousands of nodes that are running around the world. Even if we know who is Satoshi, why we should care? Well, we should care because the way Bitcoin was created was as a response to the financial crisis, and this like movement of having your destiny in your hands. And if we have a person right now appearing and saying I'm Satoshi, that's going to like change the way how people are understanding Bitcoin. I don't think this will happen for the reasons I already shared with you. Satoshi had more than like enough chances and challenges to appear and raise a hand and say, wait, whatever you are doing is wrong. He decided to not do it. So I don't think this will happen. But even if we give 1% chance for Satoshi to appear, I think this will be bearish for the Bitcoin, because Bitcoin is what it is now, because the community is like considering Bitcoin as decentralized and not having a centralized figure behind it. Everyone from us is owner of Bitcoin. We are behind the network, and we should not have one person behind who is actually trying to influence the decisions. It's not like Ethereum, where you have one guy who can do pretty much whatever he wants, and if he does not have enough voting power, he can always influence others. And that's not how Bitcoin is operating. That's why Bitcoin is winning, and Ethereum arguably is not right now, because people are behind Bitcoin.
Right. Yeah, and it kind of takes away some of the like the mystical element to it, right? That like Bitcoin is the perfect money that was brought to us from future civilizations or aliens or God, I don't know. And it definitely takes away some of that luster of the whole Bitcoin value prop. So no, I'm on board with that. I hope we never know who it is, and I hope he never sells any of those coins for number go up reasons, of course. All right, Anton, we got to let you go. But before we do, for those in our audience that are interested in learning more about you or all the incredible things and products you guys are doing over at Xapo Bank, what's the best place for me to send them?
You can always check our X accounts, either my personal accounts or our Xapo Bank X account, or you can just text us on LinkedIn. Usually we are replying to every single message we receive. So yeah, feel free to follow us on X, my personal account on X, or just send us a message on LinkedIn. So, yeah, we are here.
Beautiful. Awesome. Well, Anton, always a pleasure having you on the show. Thank you for your insights and expertise this morning, and we are excited to have you back again really soon, my friend. Enjoy the rest of your week.
Thanks, Hank. You too.
Cheers. All right, we're taking a quick break, but when we're back, more Blockchain Report with some more of today's top stories, and we have our second special guest of the day coming up in just a bit, so stay tuned. All of that and more right after this.